Hello everybody, what's going on? So, few big updates are coming from NIO's and first quarter 2026 data is officially in, and the landscape of the Chinese automotive industry is being completely rewritten. While the headlines are busy focusing on who sold the most units, smart money is looking at velocity of the growth. Today, we are breaking down why NIO is currently the most aggressive growth story in the premium EV market and how their latest March delivery numbers are blowing even the most optimistic projections out of the water. Let's put the cards on the table. We have just received the sales of emerging brands reports for the first quarter of 2026. At first glance, you see Leap Motor at number 1 with 11.02 units, but look at the tier 1 echelon. That's where the real battle is. NIO is firmly cemented in the first year, but here is the number that should make every short seller sweat: 98.3% year on year growth. To put that into perspective, look at their closest rival Li Auto or Idle Car. On this chart, they are sitting at number 2 in volume, but their growth has hit a massive wall at just 2.5%. While the former king of the startup is stagnating, NIO is nearly doubling its footprint. We are seeing a fundamental shift where NIO's premium ecosystem is finally outspacing the range extender models that previously dominated the chart. This is really a great signal, I would say. But the Q1 average only tells half the story. The momentum accelerates as the quarter closed. Fresh data just confirmed that in March 2026 alone, NIO delivered 35,484 vehicles. This isn't just a good month. This is a 136% year on year increase. This is great. Think about that in a market where Xpeng is down 33% and brands like Evita are crashing over 50% and NIO is accelerating. What else do we need? This March surge proves that the demand curve for NIO isn't just steady, it's exponential. They aren't just taking market share from other EV startups, they are cannibalizing the traditional luxury market. BMW, Mercedes, and Audi owners in China are moving towards NIO multi brand expansion strategy because of one massive competitive advantage: the infrastructure. So the big question here is that why this is happening. It comes down to echelon positioning mentioned in the research. First tier brand, multi-brand expansion. NIO isn't just a car company, they are a power grid company. Their battery swapping technology has reached a critical mass. By March 2026, the density of their battery swap has made EV owners more convenient than gas cards for the first time for millions of users. While other brands are struggling with charging anxiety, which shows in the declining sales of brands like ZZ and iCar, NIO users are swapping and going in just 3 minutes. The multi-brand approach means they are now leveraging their massive infrastructure to support not just their flagship luxury line but their newer, more accessible sub brands, driving that 136% March spike. So, what's the bottom line for the stock here? We are looking at a company that has moved past the survival phase and into the dominant phase. Delivering over 35,000 cars in a single month suggests that NIO is on the track to smash its annual target. When you combine a 98% Q1 growth rate with a 136% March sprint, you aren't looking at struggling startup. You're looking at the future leader of global premium EV market. The bears will point to the competition, but the data shows that the competition is actually falling behind. NIO has the growth, they have the tech, and they have the infrastructure moat. So, if you have been waiting for a sign that the profit powerhouse era has arrived, this is it, because the trajectory is clear. The momentum is undeniable, and for NIO, the best is yet to come. So, get ready for it. With that said, thank you so much for being here. See you in next one.